We've helped hundreds of clients build better construction companies.
We love this business, we love the people, and we've seen what running a successful, profitable business takes.
And we're sharing it all with you here on Construction Hot Takes.
We're here on Construction Hot Takes, taking a deep dive here today. I'm Jack. I'm one of our marketing coordinators here, and I'm sitting down again with Greg Gorman, one of our senior consultants here at Ascent. How you doing today, Greg?
Hey Jack, I'm really good. I'm actually really excited about this weekend coming up, as is referenced in your quarter zip that you're wearing.
Oh yeah, well, like we said too, I mean, it's starting to get a little bit chillier down here in Georgia. So I mean, a little bit. I mean, it was, what was it, 30,
Oh,
40 degrees some mornings. So kind of crazy. So yeah, I had the quarter zip sitting in the closet, ready to break them out. We've got about 4 or 5 just Georgia ones right now. I like to rotate. So every day you see me in the office, I can have a different one on. But yeah, I gotta show out because I'm a little bit nervous right now. We got a big game coming up this weekend or tomorrow, Georgia versus Texas in Austin. So big welcome to the SEC game for Texas. I'm a little nervous though, but you asked me tomorrow, I'm gonna be ready to go. But what do you think about it?
you probably should be nervous, but you may or may not know this about me. I went to Texas Tech. I'm a huge Texas Tech Red Raider fan my whole life. Graduated from there. I've been a fan, everything. And so the University of Texas has been my arch enemy, arch rival for all of my life. I cannot stand the University of Texas. I'll go on the record. I'm thrilled that they're no longer in the Big 12. I don't have to think about them anymore, but I am looking forward to this game because I hope that Georgia just decimates them. I don't want them anywhere near number one. So go Dogs is what I would say to that.
Go Dogs. Hey, we'll take that, right? But yeah, and we've had some exciting stuff going on this week, of course, too, just kind of internally. We had the relaunch of our podcast earlier this week with episode 1, which is very exciting. And kind of part of that too was we basically took some time to basically set up a designated like studio space in our office. And so I think that was really cool. Again, like we said, I'm the one that set it up a little bit, so I'm going to be a little bit biased on that. But I think for the tight little space that we've got the studio set up in, it turned out pretty good. How has it kind of been on your end of it?
Yeah, it's a great studio. You did a great job. It's very cozy. I think it's exactly what a podcast studio should be. We're sitting together, we're talking into the microphones. There's some camaraderie there. I really like that. And I'm really excited for people to go on this journey with us. I hope everybody tunes in. Our goal with the podcast is to share some experience with what we've learned in our careers, and it's an exciting thing to get to do that. And we've recorded a few more, right? So they're not out on the market yet. I really look forward to that. And I loved our first episode. So great job all around.
Yeah, we're excited to kind of keep building it from here. But yeah, with that, kind of what we kind of want to continue to do, because we've done a couple of episodes of this kind of course, before, the relaunch of the podcast, was just kind of taking some time to do some deep dives into maybe more specific topics that, could be helpful for our listeners, to take away as far as, different areas of a construction company. So, we've talked about project management, marketing and sales, bringing in leads. I know, of course, with your financial background, we've talked about, financial statements and cash flow. That's kind of where we wanted to maybe pick up more so on today within the financial area, and talk about something which, or a tool, I should say, which is, something that you feel like maybe construction companies aren't always utilizing, to the fullest potential. And that is WIP statements, or I don't know, is WIP statement the right way? I'm a layman with it. So I'm not even, that's why we need you to kind of tell me what's going on here with it. But
Great.
yeah, tell me if you don't mind. So what is a WIP? And thinking about it for a construction company, how can a construction business owner try to use it to, help their business?
Yeah, that was a perfect setup for what a WIP is. So a WIP, you said it's a tool to be used. So that's kind of how I like to frame this. So WIP stands for work in progress, and WIP report, or it's also called the WIP schedule. And that's what it is. It can also be called the work in process, but I prefer work in progress. So, and it's literally just that. It is a list of all your projects that are currently active, tracking data and information about those jobs. And we'll get into what that is, right? But it's a tool to use, to be used by the company. And generally that is the operations team and the accounting team. Those are the two kind of parts of the business that should be looking at the WIP. And it's a way to get real-time data, as real-time as you have, right? Up-to-date data about what's happening on your jobs, where you are, when you're going to be finished, right? Which is called the percent complete. How far along are you on the job? And then whether you're overbilled or underbilled. So there's an AR piece, to this, right? Which is accounts receivable. There's an AP piece, which is where your costs are on the job. And those are the two, biggest things about a job. What have you paid and what have you gotten paid? And in the end, it leads you to what's called whether you're overbilled or underbilled, right? Overbilling or underbilling. Overbilling is also called billings in excess of cost, and underbilling is called costs in excess of billing. So it's a tool to use to manage your business day to day, week to week, to understand where you are in your jobs. And like you said, a lot of people have a WIP. Maybe they're not using it perfectly well, or maybe they're not using it at all, or maybe they don't have a WIP. They're a growing business and they don't yet have one. They don't know the need for it. We like to talk about everyone should be using a WIP, and we like to talk about why. So I think that's where we're going to jump into.
And so just kind of hearing that, WIP is not in the same category as like a balance sheet or an income statement where a company is required, legally to be keeping up with that. It's just, it's an additional tool that they maybe should be utilizing on top of those, right?
Right. Good point. Generally, there's two ways to do a WIP. If you have an ERP, which is your software that you use to manage your business, if you have a construction ERP especially, a WIP is built into the system most of the time. So you can put in your data, run your data, put your job costs in, do all of your, general job costing, general accounting, general operations, project management tools, and it'll spit out a WIP schedule. But some softwares don't have a built-in WIP schedule. So we build them in Excel a lot. And you can do both, that's up to you. If you have a WIP schedule that you like in an ERP, or if you build one on your own, it's definitely an internal document. However, there is a scenario where you do have to send your WIP out. For example, if you do government contracting, or you're bonded, or you have a surety, which is a way, for those of us who've worked in the bonding market, we kind of know what that is. But if you don't know what a bond is, it's a government. On certain jobs, you have to put up a bond that says that I will finish the job. And if I don't finish the job, my insurance will kick in and finish the job for me. So that's it in a nutshell. And a lot of times your bonding company is very keen on knowing your financial data, because if they're going to insure you to finish a job, they want to know how things are going. So a WIP schedule can be used in the sense of you may have to send it to an external user, like an external, bonding agent. But generally, it's an internal document that you use in your company to know how things are going. Yeah.
Muted myself. Sorry. Thank you for clarifying that. Awesome.
Yeah.
So,
Great.
well, that just kind of leads us on. I mean, I think you're the expert here. So I think, so where should we go from here? Why don't you kind of just start us off?
Yeah, that's great. So I think the easiest way to get your head around a WIP, right, a work in progress, is to kind of understand what it is and why it exists. So I kind of touched on it a bit. A WIP is a document that tracks jobs and tracks certain data about those jobs. It reads left to right, just like you would, read a book, and it works in columns, right? So there are certain things in there that you have to have that most WIPs have. You have the contract amount, you have the costs, you have some estimated costs, right? What do we think it's going to take to finish this job? It all leads towards this percent complete that I talked about earlier. So the percent complete is how much of the job is finished, right? So me as a construction accounting person, what I look at is I can talk to my field guy and I can say, how far along are we on this job? And he can say, we're about halfway done. But as an accounting person, I'm going to say, okay, but are we 50% done? We look 50% done, but that's what the field sees. Do we have 50% of the expenses? Have we billed 50% of the contract, right? Those are things that I'm looking at. And a WIP schedule gives you the ability to say, we are 50% done with this job, which means we have 50% left to go. And that is based on the tangible data of the costs have come in. We've received invoices from subcontractors and vendors. We've paid those invoices, and we have to pay the rest of the 50% at some point in the future, right? So that's kind of the first building block of what makes it a WIP. You're looking ahead at what you have left to bill, and you're taking what you've already spent, and you're giving yourself a percent complete. And that's a very important thing. In construction, we want to know where we are on all of our jobs, because, in construction, in project accounting, we are very concerned with when a job starts and when it ends, right? I've got a budget for how much I can spend on this job and make my profit margin. That schedule and those costs are going to be determined by how fast we're going or how slow we're going. If I've budgeted this job to take 4 months and I'm 50% done with this job after 2 months, I'm probably on schedule, and the WIP is going to show me that. But if this is a 4-month job and I'm only 20% done with this job and 2 months have gone by, what happens? I've got to do 80% of the job in the same 2 months. Now you have a problem. And the WIP schedule is a tool you use to start to track that data. So that's kind of the first piece of what makes a WIP a WIP.
Yeah, absolutely. That makes sense. And then, not to get totally off track, but just a quick question I had here in that. I don't know if you can maybe pinpoint it exactly, but with the clients that you've worked with or the project you've been able to work with so far, and even just before your time with Ascent, your time working, I know you were a CFO for a while in the industry, how many companies or construction companies would you say have a grasp on this versus, how many companies out there do you think could, utilize this tool more effectively? Is there a large group, that you feel like maybe could stand to gain from taking some time to try to figure this out a little bit more?
That's a good way to think about this. Who's using a WIP and who's not using a WIP inside of a business, right? So like I said before, the people that should use the WIP if it exists are the operations people, right? The field and the project manager, and then the accounting team. But I'd like to answer your question. I like to break it into 4 pieces. We see companies who don't even know what a WIP is. They're small, maybe they haven't ever, come across a WIP, and they don't know that they need it. Then the second bucket would be people who have a WIP and just are not using it very well, right? They know they're supposed to have it, but they've never come across it, they've never been taught. And so they're using it, but maybe they're putting the wrong data into it, or they're calling it a WIP and it's not really a WIP. The third bucket is people who have a WIP, maybe like in their system. Like I said, it's built into their system, or they inherited one from a previous owner or something, and they're using it, but they're not getting everything out of it, but they're okay, right? They're getting some data, they're using it on a day-to-day basis, and we could always tune that up. And then the fourth bucket would be people who are using a WIP, know what a WIP is, understand it, it's dialed in, and they use the data well in order to manage their projects. So that's kind of the progression of how we see a WIP. Where we land sometimes is people like kind of in the second and third buckets, right? They kind of know what a WIP is and they don't have one, or they have one and they just are not using it perfectly well.
Yeah, no, that makes sense. No, I'm glad that, I'm glad that that broke out nicely into four groups like that. That totally answered my question. So
yeah, good.
Now, so we know what a WIP is, and then you answered a little bit there, maybe who should be collaborating to make sure that you're getting kind of everything you need to get it done. But then kind of where are we going next from here?
Yeah, so if we continue along kind of the left to right that I started with, right? We're putting in our contract amount, so we know what the contract is, whatever that contract amount is, and there's some other reports that you can look at to get to that contract amount. But let's just, for time's sake, you have a contract amount, that's what you're going to get paid on the job. And then we come to the, like I called it before, the AP, right? Like the accounts payable. What are your costs? What are your costs that you have already paid? And what are your future costs that you have to project? That's where a little bit of the WIP science comes in, science and art, right? A projected cost is, what are we going to spend in the future? I think I know. I've got a budget. I hope you have a budget, right? I hope I have a budget. You have a budget. It says that we're going to spend $1 million on this job. We've spent $500,000 on this job. So my cost to complete should technically be $500,000, right? That's math. But what if you're going too slowly? What if the project's going sideways? What if you need more people? What if that $500,000 that you have left to spend actually should be $600,000, right? There's an art to knowing that, and then there's a science to calculating it. And that's where we are in the WIP stage, right? What are our projected costs? So we're up to projected costs, and that says, all right, here's here's everything we're going to spend on this job, whatever that number is, right? And so then where we come to that gets us our percent complete, like I talked about before. How far along are we in that process of, of what we spent versus what we've done? And then where we land is sort of the next phase of this, which is what have we billed, right? So we started with the AR, or sorry, so we started with the AP. Now we've moved into AR. AR is what have you billed? What's your accounts receivables? What have you billed against that job so far? Like I said earlier, just take a round number. We have $1 million job. Our WIP says that we're 50% complete. We've spent 50% of our budget, right? We sent it, we paid our bills, we paid our subcontractors, we paid our vendors, we've spent that, we paid our labor, we've paid that money. Now what? We have to bill that money. Shouldn't we be billing our client for the same amount that we have done? Yeah, you want to bill and get every dollar that you have. I want to bill my client, month over month. I want to get 50% of that contract back to me in my bank account. Maybe a little bit more. That's called overbilling, and we'll get to that. But what you want to do is make sure that if you have spent 50% of the money, you've gotten 50% of your contract, right? Paid. You need your money to come in so that it can go back out again. So that's the next phase of what makes a WIP a WIP. Tracking your AR and understanding what you've billed. So that's where you have your accounting people start to step in, right? Whoever's doing your AR, they're processing your monthly bills, they're sending them out to clients, they're tracking when you get paid, and they're uploading that data either from your system or manually into a spreadsheet saying, we've been paid $500,000 on this $1 million. Now there's profit in there, so we won't get into the details, but for argument's sake, let's say it's $1 million, it's a $1.2 million contract, right? For big round numbers. It's a $1.2 million contract. We're going to make 20% on this job. So we're going to earn, $1 million. Or sorry, we're going to earn 1.2 million and we're going to spend 1 million, right? I've already spent 500,000. So I have 500,000 left to spend. How much have I billed? Have I billed 600,000, which would be 50% of 1.2 million, right? That's where we're checking and why we're checking it.
Yeah, absolutely. That makes sense.
Yeah, the numbers make sense. They're a little complicated, but on paper, when you look at a WIP schedule, that's I kind of just made my own point, right? A WIP schedule tracks all these things for you, gives you that data. The inputs come from the field, come from accounting, but then you actually have a physical document that you can look at.
Yeah, absolutely. And then the goal of course, I know one thing you mentioned kind of before we jumped on the call when we discussed the other day, but I'm kind of thinking about big picture. What is, if you could say like for a construction company, they should be doing a WIP for this reason, like what would be the number one, maybe kind of output that you should hope to gain, from kind of doing this exercise?
Great. That's actually the third big piece of a WIP. So that was a perfect setup. So after you've billed and after you've tracked what you've spent and after you've tracked what you build, you come to what's called the earned revenue, right? Earned revenue is how much have we actually earned based on the work we've done on this job? How much have we actually earned? Not what you build, because you bill what you bill, right? But what have you earned? What is the math behind how much you've spent versus how much of the job you've done? How much should you be able to charge your client for? So earned revenue is another big piece of the WIP. You have to calculate earned revenue in order to get to the last big piece, which is where we want to spend a little bit of time. And that is whether you were overbilled or underbilled. And overbilling and underbilling is a very important topic and a very important part of not only construction accounting, but all of construction as an industry. Overbilling is when you have billed more to your client than the revenue you should have billed. So in other words, I've done a certain amount of work and I've billed for it, but according to the numbers, I have not yet done that percent of work. So my client is actually paying me for more than I've done. That's called overbilling, and that is not necessarily a bad thing. Most people listening to this and most people that come across this who are in construction or own a construction company are going to come back and say, I love to be overbilled. Man, that's extra money. That's extra money in my bank account. And they're not necessarily wrong. If you can get a little bit of extra money up front, right, you put it aside or you use it for the rest of the job. The issue with overbilling is, and why you need to track it is, if you're overbilled a certain number, I'll go back to my 4-month job, right? I'm billing every month for 4 months. If I'm overbilled the whole time, what happens at the end of that 4 months? I may have work left to do. In fact, I probably do have work left to do, but I've billed everything already, right? Right? I'm overbilled, therefore I have nothing left to bill. I can't go back to my client and say, hey, can I bill you one more time? No, you've billed out the contract. Now I have to pay for my laborers. I have to pay for my subcontractors, everything that comes up across the rest of that job. I've got to go pay for, but I've already taken the money, right? So in a perfect world, I've put that money aside. It's sitting in a bank account somewhere. But in the real world, that doesn't happen. I've spent it, right? I've spent it on another job. I had a problem, whatever. So if you're too much overbilled, you might run out of money at the end of the job. The other concept is called being underbilled, right? Underbilling. Underbilling is when you've done more work than you have billed for. So your numbers aren't the same. You've done a lot of the work. You've gotten a lot of your invoices in. You've paid your subcontractors. You've paid your laborers, and you're not tracking it yet. So all of a sudden you send your bills out, right? And 2 to 3 months into that project, they owe you more money. They should be paying you more. You should have billed more up to the percentage of the work that you've done. If you're underbilled, owners don't like that because why? Now you've left money on the table. There's money that your client owes you according to your WIP schedule, right? You've done 50% of this job. You've earned 50% of this revenue, but you've only billed 40%. They owe you another check. It's not on them. It's on you because you didn't bill it. A WIP schedule allows you to look at that and say, wow, we're underbilled here. We left money on the table. We need to go get that money. So the WIP, like I said, if you think about the WIP going, left to right, it all funnels in towards whether you're overbilled or underbilled. And that's the main concept that I like people to take away from a WIP schedule. You can get other data. You can get job cost data. You can get, you can get an AR schedule, you can get an AP schedule, you can get an aging report. There are other places to go and look at how your jobs are doing. But what a WIP schedule does is bring a lot of that information together, and then it culminates in whether you are overbilled or underbilled, and then you act accordingly.
Yeah, that makes absolute sense. And I mean, I can see, of course, why that's important, right? Because like you're saying, why you don't want to be leaving too much money on the table at the end of the day, right? We can all understand that.
Yeah, you don't at all, right? Because you need that money, right? You need that money to pay for the job cost. So that's why you track how much revenue you've earned, right? Through these calculations on a WIP schedule, you want to calculate how much of that revenue you've earned. If you've earned 60% of that revenue, you want to bill for 60% of that job. Maybe you want to bill for 65 or 70%, right? That's the overbilling thing that I was talking about. If you can get a little bit of extra money as a cushion, then you should get it. But if you're too much overbilled, you're going to run out of money at the end of the job. But if you're underbilled, like, in your example, that's right. Why would you leave money on the table? You've done the work. The invoices have come in. You've paid your field guys. You've paid your labor. You've paid your subcontractor. And now all of a sudden, your client owes you money and you just didn't bill it. A WIP schedule guides you to the end of the WIP schedule, and the last column is whether you're overbilled or underbilled, and now you know what to do. And next month, you go in and you bill the right amount. You true yourself up so that you have the money that's due to you.
Yeah, absolutely. That makes absolute sense to me.
There's always more details in a WIP. A WIP is it can be very dense. It doesn't have to be, 8 or 10 columns is kind of all you need. So, reading left to right, it all makes sense. How a project starts, when you start paying things, when you start billing, and where you end up. There's a lot of detail there, but I'm glad that we got to kind of talk about the bigger picture here, which is a WIP schedule is very important. We believe that everyone should have one. We believe that everyone should know how it works. We believe that it'll give you very good data to run your construction business, and it'll give you really important data points that you might not get anywhere else. And then we want you to use that data to make better decisions about how to run your company.
Yeah, absolutely. And then if anyone gets to that point where they feel like they need a little bit of assistance, we're of course here too. That's what we have our free consultations for Adam, Greg, or not Greg. I don't know why I keep calling. I don't know why I keep thinking you're Jeff today. I don't know. That's happened a couple times now.
We get confused. The only real difference is I have more hair than Jeff.
Yes, just a little bit.
Otherwise we're kind of the same.
But yes, what I'm saying, of course, is yeah, that's what you guys are there for. Is if companies feel like they need a little bit of help, we do have our free consultations where they can set up a call and yeah, just dive into something, this type of stuff with you and see if this is something where they can maybe benefit from some further, maybe deep dives into their, getting some assistance with this type of stuff. But
And back to my bucket, when I put people in 4 buckets, I think all 4 of those buckets can always benefit from additional help and additional experience, some more than others. But we're experienced in looking at all 4 of those buckets, whether you've never had a WIP, whether you've heard of a WIP and don't know how to use it, whether you have one and it's not perfectly, working well for you, or whether you're an expert at it. There's always more to, learn from a WIP. And the reason a WIP is a WIP and everybody talks about it and you've heard about it maybe your whole career is because it's a really important document and it's really important data. And we're always happy to jump in and help when it comes to a WIP schedule.
awesome. Well, I think that's a good spot to stop here probably for this topic. But thank you so much, Greg, for taking some time to speak with us. And I'm looking forward, like we said, to more studio time, more recording. I know we're just kind of, like we said, I feel like we're just at the start of being able to really start growing and building out our podcast and getting out more content like this for, the listeners, hopefully to be able to take away, like we've said, some quick tips to go help their company.
That's what we're here for. And thanks for the time today, Jack. And great job as always.
Thank you. I appreciate it, Greg. Have a good weekend and looking forward to the next one. We'll talk to you soon.
Okay, bye-bye.
Bye.